Good evening. Ira Epstein with your metals market wrap-up, and this is for Tuesday, the 2nd of February, 2021, about 5:40 p.m. Central Time. So we're already open for the Wednesday session. We're getting a bit of a bounce in the silver. When I say a bit of a bounce, these are really big bounces, 55 cents higher. Silver was down today almost $3 an ounce. You can imagine the pressure that this has got for the traders that were running in. I know my phone was ringing off the hook yesterday. Where do I buy the silver? Well, let's assume that you had told somebody to buy it right wherever the market was. $3 lower today. You do realize that's $15,000 in a futures contract. Big numbers. I mean, you got to trade the mini contracts in this if you're going to try to survive. Copper market trying to hold the lower Bollinger Band. You'll see that in a minute here. Gold up a little bit. Still nothing going on. We're getting a little bit of a bid tonight coming into the currencies. But what's really going on, the market's got to deal now with what's going to happen with the COVID relief bill. We get a lot of economic data that comes out the rest of the week. And of course, we're still dealing with the fallout of the wild swings in the stock market, which means the big broad ranges that you get have to narrow in again. We'll see that as we take a look at some of these markets. First off, this is a weekly chart of just closing prices, no more than that. And as you can see, the market is staying underneath this 18-week moving average of closes. I look at that to define the bias. The bias is down as long as that's the case. When it's over it, I have an upside bias. Bias is a filter on other of my indicators. When I take a look at the action, I think you'd agree with me that at the beginning of the year, we got over the 1960 level, fell back in very quick order, just over 1800, and you have just churned sideways ever since then. That's all that's really going on. And no, you're not trending. You have a pattern of a lower low and a higher high. This is the swing line study. And what the swing line study does is the swing line looks at the current price, and is the current day got a higher high, a lower low, an outside day up, an outside day down, or an inside trading session. Off of those 5 parameters, I set up rules where it draws a line automatically on the chart. I'm looking for a pattern that you'll hear so often on all the financial TV stations. Hey, the market is trending higher. It's got a pattern of lower highs or higher lows, higher highs. That's an uptrend, not lower highs. Remember that. I always like to throw things like that out to make you wake up a little bit. What about moving averages? This is one of the most important features that traders follow. Don't ask me why, it doesn't matter. I like what the herd does. We had a bearish crossover, and I want to show you this right over here. This is when the 18 got underneath the 200. I pointed this out yesterday. The market hung in there. This is Monday. This is today. So the market comes down, takes out that low. That's what normally happens on bearish crossovers. And tonight you're getting a little bounce. The problem is now that you got the short-term average under the really long-term one, and now the 100-day is going to start marching down to it. That'll take a long period of time. If it's going to get there, it could be another month. The interesting part is that on the 7th of this month, we're only at the 2nd, we typically get a buy signal in gold off a seasonal basis that lasts about 30 days. So I'll be watching to see what that does. I'm just looking at the churning. Do you think that I'd be interested in telling my clients to try to catch those swings? I promise you, I've done this I'm in my 52nd year. No, not going to do that. Trading is one thing, throwing money at a dartboard is another. What you have with your under the 18-day average, if you look at the Bollinger Band, it's racing to the market. Past shows you that Bollinger Bands tend to stop a break. It's like a resistance point on the downside. As you come to it, it's going to offer all that support. It is offering and saying, hey, it's not going to let you keep pushing that market lower. So I'm looking at this 1830 level is starting to have a level of importance. It would not surprise me that later in the week we start marching back up to the 18-day average and fighting as the market searches for direction. As we come over to slow stochastics, it's a momentum indicator. I believe that momentum leads price, not price leads momentum. And it's gone flat, and prices have gone pretty flat. So what do I see in gold? Not much of anything. I see a lot of traders trying to push it one way or the other and probably getting very disappointed. The gold-silver ratio is starting again. We had a correction in silver, and now tonight, silver's gaining a bit on gold. It's under that 18-day average, so when that happens, what is it? You need less ounces of silver to get 1 ounce of gold, which means silver worth more. When we come to the silver market was over the upper Bollinger Band, as you know, yesterday. I tried to point out to you that markets don't stay over the Bollinger Band very long, 5% of the time. I count, when I look at a chart, how many times in a row is it over that band. That was your first day over it. You were sharply over it. And for those of you that get my morning research or my other reports, you'll see that I showed you what the third flip of the window envelope was. And it came in right up here. That doesn't mean you can't go higher, but typically the combination of an upper Bollinger Band and a third flip of a window envelope is deadly. It's an area where pros look and they'll go, maybe I've milked it too much. And that's exactly what happened today. So yesterday you're up $2.50. Traders are trying to buy. Today you're down $3.01. Now you're getting a bounce tonight up 54 cents already. Do you really think that's a trading vehicle for you? It might be, but it's a difficult one. The good news is you're back in the Bollinger Bands. The bad news is you still have a pattern of a lower low and a higher high. Now, what the market does here is very important. Is it going to fall back to the 18-day average for better support? Wouldn't surprise me. Momentum still slightly pointing down in the market. Bias up, no trend on the swing line, momentum pointing down. A real mess of a chart. Again, we're at the lower Bollinger Bands, these black lines on the copper. When you hit them, that's where I contend the pro takes money off the table. Now you're going to say, oh, Ira, I want to play that the market's going to break out one way or the other, and I get you. You do get those breakouts, and you see it happen right back here. There are ways to try to catch those. But right now, as you've been approaching this market on waves of lower highs and lower lows, let me give you the mindset that I think is going to come in here. We're about 10 days away from where the Chinese take off an important week for the lunar holiday. Leading right up to it, they generally don't do very much because, why? You're going to get stuff on docks. There may not be the dock workers quantity you think. There's going to be other things coming in. People start backing off, so demand falls off a bit. And on that, the market can slip back because you're not seeing prices bid up right now. But as they come back, do you think they wait for the day they go back to work, or they start putting in orders ahead of time? That's what you have to look for when that shows up. The market's in a downtrend. It's hit its downside target. It's oversold. In the platinum market, with today's action, you now have a pattern of lower highs and lower lows. The market is over the 18-day average, so the bias is up. Remember I said it's a filter. You need to close under that 18-day average to turn the bias down, keep the swing line down. Momentum's already slowing down here. This is the battleground. For those of you new to watching me, you'll notice that the 18-day average, you'll hear me say over and over, it is the line in the sand. From that number's where trends develop. You'll see this over and over if you watch these videos of mine. If we come to the Palladium, you're in a downtrend. You have a market that is embedded. What does embedded mean? You've already converted the market from being oversold to locking in a bear trend. You had a bearish crossover where the 18-day average in red got under the 100-day, and you have lower highs, lower lows. I contend that the rallies in this market are going to be sold by the pros until the red line that makes up the slow stochastic, its value right now is 1593, closes over 21. Just getting over 20 might not do it. I need to close over 21. That would tell me that you've run out of your downside momentum. Until that occurs, you get rallies like today, and I think you're going to attract selling in the market. The pros will use the momentum to come out, and the support will be on further breaks to the lower Bollinger Band, obviously, if the market can get there. In the dollar index, yesterday, let's go back, You got up and closed at the upper Bollinger Band. That's generally enough where the market's now gets itself into trouble. It's also overbought in an uptrend. I'm going to repeat, 5% of the time you'll stay over an upper Bollinger Band. Closed over it once, now twice. My rule of thumb is this. I count each consecutive close over the band as taking away one of the percentage points of the 5% of the time the market will stay out of those bands. So tomorrow, I give the market a 3% chance of staying outside of the band, a 97% chance of coming back in it. If I had you as my client, I'd be telling you, you've got to cut positions down, not add them, because the percentages say you're going to move to the right, and the question is, what happens? Obviously, you also have to look at weekly charts to get a feel, and I show that in my morning updates. So you put it all together, you try to come up with a plan, and that's the game. So I'd like to show you, if you're new to seeing me, what I do. I put out 2 daily updates that I write a week. They are not long. They're like a Reader's Digest. Headlines, commentary. Headlines, commentary. A lot of bullets, a lot of points. I back it all up in what I do in my my videos. What my videos do is they're going to give you ideas on your trading. I come out and I try to give you trends, if there is a trend. No trend, I'll give you ideas. Hey, why are you looking to make something out of nothing? That's the biggest problem traders have. Number 2, looking at both the daily charts, the weekly charts, getting a feel for what they do. So between the written commentary, the teaching how to work with stochastics, moving averages, window envelopes, swing lines, you start to get a game plan as to what's going on. You got nothing to lose. If you haven't tried it, give us a call. If you want to sign up, go to our website under free offers on the right-hand side. I'm Ira Epstein. You have a good day. Talk to you tomorrow.